I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Gem International is a new diamond explorer in the richest diamond producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. Gem International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Chris Vermeulen. His website is thegoldandoilguy.com. Welcome back to the show, Chris.
Hey, thanks for having me, Jim.
The U.S. stock market, what's your expectation for it in the next few weeks?
The next few weeks, the stock market is starting to show signs that it's getting close to topping, and we've talked about this a few times. A couple of weeks ago, we were talking about how the market looked as though it was going to break to a new high and grind its way higher until all the shorts get shaken out of the market, which are people who bet against the stock market expecting to profit from falling prices. So we were anticipating the market to go up, make some nominal new highs, continue to hold up there until everybody kind of becomes bullish again. And that's what we're seeing, is finally everyone is becoming overly bullish. There's all kinds of different things, indicators, ratios kind of indicating this. For example, the options, the put-call ratio is showing that everyone is overly bullish on the market. They're all buying calls, which means they're using leverage bets on the market, expecting it to go higher. We're seeing money flow into small cap stocks. Like today, we're seeing the Russell 2000 trade higher while the rest of the large caps are trading down. And what that means is the average investor are buying these highly leveraged, these very fast-moving, risky stocks because they're feeling really bullish about the stock market. And they're dumping other things. We've been seeing precious metals go down in value, bonds, we've seen them correct. So we're kind of getting to this stage here where we're finally seeing everybody finally just kind of change direction and become really bullish on equities, and they're starting to sell off their precious metals and their bonds and their safe plays like that, like utilities. And so I think we're another week or two away from the market rolling over here hard in a big way. I think we could see equities squeeze a little bit higher, and then I think we're going to see a very sharp drop come into play here, which will put a bottom in precious metals and other safe havens. And we're going to see a lot of things change direction and make some pretty big moves going forward.
What do you think the overall reaction to that kind of action is going to happen to people here? Because I know how they love to overreact. Yeah,
so I have a feeling we could see something very similar to what the last two sell-offs have been. Like in 2015, we had that big crash in August. It was 4 big down days in the market where we lost like 8% or something like that, a huge drop. We had another one this January. It lasted about a week and a half. I think we're going to get something that is going to be very precipitous, it's going to be like a waterfall where we start to see a small red candle. The next day it'll be a bigger, longer red candle. The next day it gaps down. It'll be a really long candle. It's just going to be a waterfall sell-off, and the market moves very fast. Everybody seems to be on edge, waiting for a stock market top, or not exactly waiting for a top, but they're aware that when the market starts to roll over, people quickly jump ship and say, just close out my position, get me out. And that's why we're seeing these very sharp drops. As soon as price starts to break down, everybody, instead of just holding tight, seems to be just hitting their sell button saying, I'm not riding another 2008 crisis down. People are kind of very aware of that. And that's why we're getting these very sharp, quick moves. So I think people are going to be caught off guard, and they're going to be caught just like in the August kind of crash where the move happens and then you hear about it a couple of days later or a day later, but so much of the move has already happened. It's not the best time to get out anymore, and you kind of got to wait for a rebound like we saw after the August and this January sell-off. We see a nice rebound back up to these highs. It's really tough because everybody's bullish right now, and all the things are indicating that we're very close to a market sell-off, and this is when you actually want to be trying to leg into a potential short position.
Could we almost see a repeat of last year's Black August?
Yeah, and that's kind of what I feel as though is going to happen, and I think it's going to kick off. I think we're going to see a very strong sell-off like the 2008 kind of. We're going to see, I think, a very quick, sharp, hard bear market that'll take place because we're seeing all kinds of things happen in the overall stock market, specifically the SP 500, that is just masking the problem, the weakness in companies, the economy. Back in 2007, 2008, the SP 500 share buybacks by company was huge. It was $590 billion, something like that. And right now we are right at those exact levels again, meaning companies are buying back shares of their company because their earnings are poor and the executives want to continue to get their performance bonuses. So if they buy back shares, that means they still make the same amount of money, but they have less shares. So the earnings ratio for shares continues to hold up. So it looks like they're making $1 per share, which they are, but really if they didn't buy back those shares, they might only be making 70 cents a share, which is not what the street would want. It would show that the company is not making nearly as much money as they used to. There is no growth. Sales are dying. So there's this huge cover-up, just like we kind of saw back in, really it started in 2004 and went all the way to 2007. We've been seeing the same thing from 2010 all the way till now. So, and we're at those same levels. Eventually companies run out of money to buy back their shares. Eventually you can't keep just buying shares back, and eventually the music's going to come to an end. And there's going to be earnings that start to become worse and worse, and there's going to be fewer share buybacks, and it's going to lead to a major market top.
Should there be a ban on executive bonuses so that shareholders know how a company's actually doing?
Yeah, but they would never vote for that. Unfortunately, it would be nice if you could, if everything could be very clear. And you know what? Companies doing these share buybacks, if somebody was really into it, they can calculate and figure all this stuff out. It's not like they're hiding it, but they're definitely not making it, easy public knowledge that, our earnings really are, 85 cents a share versus $1 a share, because we did our share buyback. So it looks like we blew away estimates, but really we're way under. They don't do that, right? But all the information is there because it's a publicly traded company and everything is publicized and is explained. It's just deep into the financial statements.
Well, I've been to shareholder meetings where it gets pretty ugly because they don't want the executives to do it, but they do it anyway because they don't have enough votes to change the policy.
Yeah, I know. It's just the way it goes, unfortunately.
Where is this money going to go if it's going to go into junior stuff? After that, when they start to plunge, what happens to that money?
Yeah, so when the general public, like right now, for example, they're buying into small cap stocks today, they're ditching utilities, which are a safe haven play, and we've seen precious metals under pressure. So when all these people who are buying into these equities and feeling really bullish, when things start to sell off and roll over, they're naturally going to start going to the safe haven plays, which are right back into precious metals. We're going to see precious metals, I think, do extremely well, not only because the U.S. stock market will be falling in value and people don't want to hold equities, they want to move out of that, but because there's so many other things happening globally with currencies and countries, that gold is naturally going to start to have a much stronger weighting in people's portfolio. They're going to want to get it as a hedge just to protect some of their currency that could lose value. So we're going to see a lot of money pile into these safe havens. And, there's one area that I've really started to pay attention to and started to write about, which is talking about digital currencies or cryptocurrencies like Bitcoin and all the other altcoins that are out there. There's over 100, I think, plus different digital currencies out there. Some are much more popular than others. But these currencies are all gaining popularity. They're all gaining in value. And, we've seen a huge run-up in Bitcoin in the last year alone. It's gone from about $450 per Bitcoin all the way up to about almost $800 a Bitcoin, and now it's kind of flatlined around the $650 area. It's building up another big pattern where it could explode to the upside. And a lot of money is going to be, I think, gravitating to these because you don't have to worry about the central banks. You don't have to worry about the currencies being, printed with QE and just losing value. So a lot of people are moving to these digital currencies, and these are still the infant stage. A lot of these currencies are still only a fraction of a penny, a few pennies, or maybe even a couple bucks. But they're going to become very powerful going forward. And I, myself, have been digging in, trying to learn as much as I can about all these currencies because I want to have a little bit of a hedge or insurance plan that if who knows what's going to happen with the banking system and fiat currencies. So why not have a small kind of cachet or a basket of these digital currencies that could skyrocket in value? For example, Bitcoin was trading under $1 and a couple bucks there for a while, and then boom, it exploded to $1,100 a share. So some guy who just went out and bought $1,000 worth or $100 worth, has now got $1 million sitting in their account a couple of years later because of this boom. And there's so many benefits to these digital currencies. If you were to go to, if you're familiar with TED Talks at all or TEDx, type in like Bitcoin, digital currency, or cryptocurrencies. There's a few great talks on there that talk about how these digital currencies are changing and going to change the financial situation and how it helps people on a personal level, especially in third world countries where they don't have access to money, but they all have a cell phone. They can transfer money back and forth, no fees. It's instant. There isn't manipulation. It's just such a great way for people to transfer money back and forth, barter and change. It's just such a clean system versus currencies and banks and regulation. So this whole side, this digital side of money, I think is going to be really interesting. And there's actually a fund out there that you can publicly trade. It's like an ETF that mimics the price of Bitcoin. So people who don't want to go and buy actual Bitcoins can trade them on the stock market. And I'm not exactly sure what that symbol is off the top of my head, but you can find it. There is one out there. So these things are becoming mainstream, and it's going to be a matter of time before there'll be an ETF that holds, say, the top 5 or top 10 digital currencies in a basket, just like people are holding GDX, a gold miners ETF. There'll be a basket of digital currencies. I think it's a brilliant idea. I think it's going to have huge potential. So I'm sure it's probably already in the works. But these digital currencies, to me, I think are vital to have a small amount of money put into several currencies. You never know which one is going to explode.
What happens when a major country like the U.S. or China says, oh, Bitcoin's now illegal?
Yeah, I don't know what'll happen. And they're probably going to try to do it, but just like everything that's illegal, it still happens and still goes on. And, it's could be tough to track. There's all kinds of, there's all these different alleys of the internet. I'm not sure if you've heard of the dark net.
Oh, yeah.
So there's the dark net that was what developed back in the 70s for military, and everything is coded and you can't track anything. And there's a huge market on there. You go to the marketplace, nobody knows who anybody is, where they're located, but it works on a ranking system of reviews. So you're buying the best quality, and the customer service is phenomenal. And people are using all these currencies that are you can't track. So you could buy a Bitcoin, but you can go to a service where they scramble the Bitcoin, so you end up with pieces of all kinds of random people's Bitcoins. You can go buy whatever you want, and it can't be tracked. So there's going to be all kinds of things available if that does happen, where they say it's banned, you can't have it. Who knows? The internet is very interesting how it unfolds, and how regulators are going to try to handcuff something that is, a bunch of ones and zeros flying across the web. It's going to be it's going to be a new war. The Fed is going to be struggling. All the central banks are to keep control and want people to have their own currency, not go to these digital. But I think it's inevitable that people are going to naturally migrate to a digital currency just for ease of use and potentially tax avoidance and all those things.
Of course, that's why governments would probably hate it. But as you said, well, if Trump builds a wall, there's so many ways to get around, over it, under it. There is a wall already along most of the U.S.-Mexican border. That doesn't seem to be making any difference. For example, Mexicans just fly to Canada and then cross into the U.S. from here.
Yeah. You can't stop anything, really. You can maybe slow it down, but you can't stop. If somebody wants to do something, it pretty much will happen.
Well, if government will did everything, there'd be no drugs, right?
Yeah, exactly.
We'll have more with Chris Vermeulen right after the break.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
GEM International is a new diamond explorer in the richest diamond producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. GEM International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
Welcome back. We're speaking with Chris Vermeulen. Chris, what's your outlook for crude oil right now?
Crude oil has been more or less topping out here for several months. Since late May, we started to see the cycles top out, and it's been rolling over and selling off since then. It's been a very controlled decline, which is nice. It's better than seeing a kind of waterfall type sell-off. We're seeing a pretty critical support level that was hit this morning in pre-market trading. It came down, hit around the 22-25 level, which is a critical pivot zone going way back into August of last year. And we're starting to see a little bit of a bounce. Overall, I still feel as though short term we're going to see a little bit of a bounce in oil, potentially just this week. And I think we're going to continue to see a flounder and move back down. You and I talked about this before, that I think it can move all the way down to the 40 level and high 30s, like 37.50, somewhere down there. That's a really critical level, that 37.50. I could see it coming down and trying to tag that over the next probably month or so. And of course, I think the crude oil continuing to fall is going to put a lot more pressure on the equities market. And eventually we're going to see the energy sector start to break down, like the XLE. It's been doing really well, but it's hanging out there on a cliff. And when it breaks, it's going to do what it probably did back in January and in August last year, where it's just going to go into a waterfall sell-off. And the energy stocks have got quite a big weighting on the market. So when it starts to crumble, it's going to pull the equities down. And once the downward momentum picks up in the broad stock market to the downside, people are going to just start selling every bounce, every pause they'll be selling, and it's going to create a much bigger drop. And if you're to look at the energy sector in total, zooming way out, there's potential we could see the XLE, which is trading at $67. We could see that come all the way back down to the 52 level, test those lows we saw in January. I think that could happen much easier than most people expect. I think we could see a lot of weakness. That's a big drop, which means we're going to see the stock market be under a lot of pressure. So energy is, again, I think crude oil has bottomed. I think we're going to see it trade in this big sideways range here for potentially a year or so, between this more or less 50 and the 27 level. I think we're going to see it trade through there until the U.S. stock market goes through a bear market and starts to bottom, and then we're going to see energies really take off again. And so we're going to be in this huge range for quite some time between oil and energy stocks in general.
I was going to say the summertime stock market chart could look like a hammock.
Yeah, it could. I'm not a huge fan of what is going to take fold. I think in the later half here, in the next couple of months, I think we're going to see a lot of weakness and a lot of volatility. I just hope there was going to be a great opportunity to identify the short-term market top and be able to short it and catch the first leg to the downside. Because I typically don't jump in and short a market making new high. I wait for some type of signal reversal sign. A lot of people could go away in August again this year, and they come back from holidays and they realize the stock market is down 10%, and there's nothing they can do about it. I have a bad feeling that's going to happen to a lot of people, and then I think that's going to be the straw that breaks the camel's back, and that's going to be a critical level for the SP 500. And when it breaks, it's going to get really ugly, I think, going into the year end.
Chris, usually when we have these downturns, traditionally they were in September or October. It seems to me it just happens a month earlier.
Yeah, it does. It definitely seems like that. People seem to be jumping the gun and kind of front running it, maybe starting to create it, and then everybody just jumps ship. We do have a lack of liquidity. The markets just don't have the depth that they used to have. So when huge funds want to start to sell, it's really easy to move the stock market. It's unbelievable how small that stock market really is. Once you start trading some half decent sized capital, you can move the S&P 500 a couple points with a very small order in general. So once the big selling starts, these funds, they're all watching very closely because they don't want to be caught holding everything, and they're going to all hit that sell button, and that's why we got that big August drop. We also had that sell-off back in 2014 in October. That was a huge crash too. So we've had 3 of these crashes. All came down to around roughly the same support zone, had very strong recovery. Now the market is etching its way higher. It's the most bullish we've seen. We got long-term indicators all screaming that everyone is really bullish, that there's a new bull market starting. Meanwhile, I think it's like the bitter end, and everybody's going to be caught left holding the bag of stocks while they drop in value, and it's just a matter of time. These major topping patterns take a long time to play out, but we are very close to some type of event or some person doing something that is going to trigger the next bear market. It may not be the reason the bear market started, because we've kind of seen this forming and building for some time, but there's going to be the trigger that breaks the market, and then people will say, well, that caused the bear market of 2016 or 2017. Well, it's not what really caused it. It's just the trigger that finally got the momentum to shift sides.
Chris, thank you so much for chatting with us.
Hey, always a pleasure, Jim.
My guest has been Chris Vermeulen. His website is thegoldandoilguy.com. You're listening to HowStreet.com radio. Find us on Twitter at TalkDigitalNet. Our popular YouTube channel is Talk Digital Network. Questions for the show can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.